We're going to see a year where the price of gold moves up, several fold. Whether that's going to be 2024 or 2025 or 2026, nobody knows. But I think it's coming. I think there's that kind of potential in this market, and we get a real big bull market. We get $5,000, $10,000, $20,000 gold, and those targets are not out of the question. I mean, I said gold went from 300 to 1900 in the decade from 01 to 2011. Gold went from $35 an ounce in 1970 to 800 in 1980. I mean, think about the magnitude of that increase.
PeterSchiff, the American stockbroker, financial commentator, and CEO of Euro-Pacific Capital, has expressed optimistic projections for gold prices, foreseeing their potential to surge between $5,000 and $20,000 per ounce. Schiff's confidence is grounded in historical precedents, notably citing significant upswings in gold prices from 2001 to 2011 and 1970 to 1980. As of the early Asian session on Thursday, gold prices have gained momentum, surpassing a record close of $2,070. The precious metal is poised to maintain its appeal in 2024, mainly as several banks have injected ripples of anxiety into the markets. According to ANZ analysts, gold is anticipated to average above $2,000 throughout the year. Despite concerns about rising interest rates, Schiff contends that gold has demonstrated resilience and is likely to perform even better in an environment of falling interest rates. The rally in gold prices peaked at $2,070.70 per ounce on December 26th, representing a robust 13.8% increase from the $1,819.70 closing price at the end of 2022. This surge occurred amid higher interest rates impacting precious metals, offset by geopolitical turmoil bolstering gold's status as a safe haven. Schiff further posits that higher inflation might signal the Federal Reserve's struggles to control it, potentially boding well for gold in the long term. Commodity market experts also point out that gold prices are expected to remain upward, with the Fed hinting at the end of the high interest rate cycle and implementing 3 interest rate cuts in 2024. Let's delve into key moments from PeterSchiff's interview with these video clips.
There's a lot of fundamental misunderstandings about gold. But yeah, when gold hit that new record high, rather than just continuing to rise, we had a sharp drop. I mean, gold got to 2135, and the next day it was back below 2000, or 2 days later. I think it got down to 19, maybe 75. So it had $150, $160 pullback almost immediately. But it quickly recovered. It didn't, go too far below 2000, and it didn't stay there that long. So, I think that this is now the new support for gold, just around $2,000 an ounce. And that used to be the record high. So the fact that we've now are building support near what used to be massive resistance is a very bullish technical factor. And the fact that gold has held up this well in the face of some big headwinds, and these are headwinds that really shouldn't be there, but it's about perception. And the perception was that rate hikes were going to be very bearish for gold, that rising real interest rates, to the extent that they were real, but the markets believe that should have been bearish for gold. But we've now basically finished the tightening cycle, and gold is still at 2000. So if gold did this well in an environment of rising rates, imagine how much better it's going to do when rates are falling. The real environment that I think gold is going to flourish in is when inflation is accelerating, but the Fed is not matching that with rate hikes. And that's going to be a big wake-up call for investors, because I think what was, kind of keeping a lid on gold was the belief that the government, the Fed, was going to be vigilant and do whatever it takes to put that inflation genie back in the bottle and bring the rate back down to 2% and keep it there. And that's just a fantasy. That's not going to happen. And the markets haven't come to terms with that. In the past, or recent year or so, worse than expected inflation news would come out. That would be bad for gold, even though it's good for gold because gold's an inflation hedge. And so if inflation is a bigger problem, there should be more demand for a hedge. But the way the markets reacted to the stronger than expected inflation data was just the belief that, okay, this means the Fed's going to have to fight harder to get rid of the inflation. That just means higher for longer. And that would hurt gold and it would help the dollar. But I think as investors start to realize that higher inflation numbers don't mean the Fed has to fight harder to win. It means the Fed has already lost and inflation has won, because there's a limit to how hard the Fed can fight given how much debt is in the system, especially how much debt the governments have and how much debt the banks are holding. And as much as the Fed would like to see lower inflation, they don't want to see a financial crisis. They don't want to force the US government to default on its obligations. The Fed is very political. And so when it has to pick its poison, it would rather pick inflation than a financial crisis and just a collapse of the banking system and a sovereign debt crisis. So when the markets realize that that's where we're going, I think gold's going to be off to the races.
In the current financial landscape, PeterSchiff's analysis points to a potential scenario where if the Federal Reserve, Fed, adheres to expectations and initiates interest rate cuts, there could be sustained growth in the markets. Schiff foresees that such a rate reduction would likely result in a significant weakening of the US dollar and a considerable upswing in gold prices. This perspective gains support from recent developments in the gold market. The precious metal appears poised for further gains following a substantial drop in the United States Core Personal Consumption Expenditure Price Index in November. This decline has fueled expectations of early rate cuts by the Federal Reserve. Concurrently, the US dollar index is hovering near a 5-month low, below 101.50, and 10-year U.S. Treasury yields have dipped further, reaching around 3.87%. In an inflationary environment, Schiff suggests that gold might outpace the Dow Jones Industrial Average growth. Meanwhile, recent market movements support the notion of a positive trend, with the Dow Jones Industrial Average reaching a new closing high and the S&P 500 finishing just shy of its record, showcasing continued positive momentum in U.S. stocks. Let's get back to the interview.
Well, the reason the markets are rallying is the perception that the Fed is done hiking. So if the Fed were to surprise the markets and start hiking rates again, yeah, the markets are going to get clobbered. But if the Fed follows through with, what everybody feels is coming and we start to get rate cuts, then the markets could continue to rise along with the decline in rates. But I think that a decline in rates will be accompanied by a big decline in the dollar. And that will mean a big rise in gold. And so I think that the gold price will rise faster than the Dow. And so, yeah, in real terms, stock prices will be falling. But in nominal terms, in dollar terms, they can continue to rise. But, they could drop. I mean, if there's a perception out there, if the inflation threat really gets bad enough and, it causes the Fed to do something, then that's going to be very negative for the markets. But to the extent that the Fed just tolerates higher inflation and continues to ease in the face of it, that's going to destroy the dollar. And then gold's just going to go through the roof. And in that scenario, you could actually see a bigger decline in the gold value of the Dow, with gold going way up than you would see if gold and the Dow came down. I mean, if gold and the Dow came down, I would expect the ratio to close because I think that the Dow would come down more than gold. But if we have massive inflation, then I expect both indexes to rise. I just think gold will rise a lot more, which means that the Dow is falling in terms of gold. But I think in an inflationary environment, the Dow could be the strongest of the major indexes. I think that you're going to be worse off in the NASDAQ than you would be in the Dow. Those industrial type companies, or at least those businesses, there's not that many industrials left in the Dow Jones Industrials. I think it's a better place to be in an inflationary environment than, let's say, the NASDAQ or the S&P. But the best place to be is going to be in neither. You want to be in foreign stocks. You want to be in value. You want to be in inflation hedges, commodity type companies. I mean, you want to be in the strategy that I'm pursuing personally and the strategy that I'm pursuing for my clients at Euro Pacific Asset Management. I think those strategies will perform much better than any US-based equity strategy, and especially the debt strategies. I mean, if you're holding on to fixed income because you think, hey, the Fed's going to cut or the Fed's going to go back to QE, and so I'm going to buy these treasuries that are yielding 4% because they're going to go up in price, and the yield's going to go down to 2% or something like that, you're in for a rude awakening. I think people are just going to be, eviscerated in fixed income because inflation is just going to kill them. I've been very bullish on gold for many, many years. And so with all the years of gold failing to live up to its potential, nothing really surprises me anymore with gold. I did expect the price of gold to move higher, and it has moved higher. I just would have expected it to move even higher than it did. And the gold price keeps disappointing to the upside. So, I mean, directionally, yes, gold has been going up. I mean, gold is $2,030, $2,040 an ounce. Not too far off an all-time record high that we set about a month ago. I think we got to 2,135. So gold's been going up. I mean, when I first started speaking publicly about gold on national television, the first time I went on CNBC, gold was, 400 and change. So yeah, I mean, it's gone up, but I would have thought it would have been higher. And I still think I'm going to be proven right on, how much gold goes up. It's just taking a lot longer to get there. But I think at some point, we're going to make up for a lot of lost ground. I think we're going to see a year where the price of gold moves up, several fold. Whether that's going to be 2024 or 2025 or 2026, nobody knows. But I think it's coming.
Considering the recent record-setting highs in the Dow Jones Industrial Average and the S&P 500, how resilient is gold as an investment option? And what role might it play in diversified portfolios in 2024? How do experts view the potential impact of geopolitical factors, Federal Reserve policies, and global economic conditions on the trajectory of gold prices in the coming year? What is your prediction? Share your thoughts in the comment section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.